you can 100% commit to this challenge in the next 90 days, you will drastically transform your trading. If you can't stick to this 90-day challenge, you probably don't have what it takes to be successful at trading. If I discovered this earlier on in my trading, I would have started making consistent money 5 years earlier than I did. This challenge will help you escape that cycle of consistently losing money and turn your trading into a money printing machine. To make money trading, you have to focus on the process of getting 1% better every day. You won't tangibly notice yourself getting better daily or even weekly, but over months you can look back and you will see a drastic difference. Once I realized trading psychology was the key to be successful at trading, I went from consistently losing to starting to consistently make money. That's why over this challenge, not only do you need a track of how and why you got into your trades based on your strategy, but what emotions were you feeling when you made the trading decision? Did you get into a trade too early because you had the fear of missing out? Or did you jump out of a trade too early because you felt the fear of the trade turning against you and you didn't want to give up your profit? Now, if you don't have a trading strategy, I will show you a trading strategy that I use that you can use during this challenge in a minute. You have to remember trading is statistically based. Just because a trade lost does not mean you did something wrong or your strategy didn't work. I got the privilege of talking to a hedge fund manager about backtesting or reviewing your trades, and he said the biggest issue people have is unknowingly making changes that hurt their overall profitability. What he means by that is thinking that every trading loss you take has something fixable, would either make it profitable or avoid the loss entirely. The market has infinite possibilities. Anything can happen. Every loss doesn't have a lesson. Sometimes that lesson is just that things don't always go in your favor. You can take a good trade setup and it still turn into a loss. He also stated that backtesting is almost worthless when it comes to a specific trader's profitability, because at the end of the day, a trader's success is based off of their psychology and ability to execute the strategy. The biggest reason people fail at trading is because when the strategy doesn't work out, they look for other things and patterns to make it work, or they switch to a whole new strategy. And I like to call this the infinite learning loop. There are infinite ways to trade in the markets, and there is always interesting new information out there that you can find. This is where the 90-day challenge comes into play. So the first thing that you need to do to stick to this challenge is to open up a separate trading account. Or if you're just starting out, open up 2 demo accounts. You're gonna have one account that you focus your main strategy on and this challenge on. And if you don't have a strategy, again, I'm about to show you one you can use every day. Then the second account is so you can try other patterns or strategies that you feel the urge to test. When it comes to journaling, track them separately. The whole idea of this challenge is to make you stick to one strategy and prove to yourself that it works. Remember, the biggest reason people fail in trading is that learning loop that they get stuck in. It seems so basic and dumb, but to be successful at trading, you have to do what people aren't willing to do. And as basic as it sounds, people aren't willing to push through the struggle of sticking to one strategy and working on perfecting that. They constantly want to look for the next pattern or indicator that will make things easily work without putting the hard effort into trading. So for the next 90 days, trade one strategy in your main account, stick through it through thick or thin, even if it seems like it's not working out, because you need to build a journal of trades so you can see what's working and what's not. Don't make changes to your strategy right away. You need to stick to at least 20 to 30 trades to get enough data to logically be able to make a change to your strategy. If you want to make a change after a couple of losses, that's your emotions wanting to make a change because of fear of losing money. If you feel the urge to try other patterns, that's what the separate account is for. You can still make money from them, but it keeps the accounts separate and the strategy separate. So when the dust settles, you can tangibly see the results. To get the most out of this challenge, create a framework that you can focus on every day. Focus on building habits to keep you on the right track. One thing I do is I read my trading plan and my goals right before I trade. So I'm focused on sticking to the strategy and not the results of making money. I look at previous trade setups that I liked, so I know what good ones look like. I remind myself what I'm looking out for when I'm trading. Trading psychology is the key to become successful at trading, but having a strategy that you can be confident in is the foundation of everything, especially when backtesting doesn't really work. Let me walk you through the strategy that I've honed and traded over the years of my trading that you'll be able to use with confidence during this challenge. So the strategy I use is really, really simple. It can be used on any market or any time frame, but what I do is I focus on reversal trades on the futures market. And so another thing that made me profitable was realizing that one strategy and one pattern makes it easy and simple to focus on to become profitable. And so what that pattern is for me is looking for reversals in the market. The market has ranges that it constantly makes between resistance and support levels, and it will just ping pong back between those levels. And so what I have realized over time is that you can find those levels pretty easily, and then you can bet that the market's going to go down off of those levels and keep your risk relatively low, and then your potential profit much higher, which for trading is really good. You want a favorable risk reward. And other than that, I just stay out of the market because again, it keeps things simple and you can focus on essentially the low hanging fruit. And so this strategy can be used on really any market or any time frame. If you want to trade Forex, crypto, futures, whatever you want, you can do on an hour, 4-hour chart, daily chart. But what I do is I focus trading on the futures markets. They allow you to day trade with a small account, and I trade on a 15-minute and a 1-minute chart. So I trade a little quicker, but you can still use these concepts on a lot larger time frame if you like it. Now, so the first thing that I do is I have 2 separate time frames that I look at. And so how that works is on the 15-minute time frame, what we're currently looking at, is that's where I look for those swings in the market to draw the resistance or support levels. And so all I pretty much do for those is I look for 2 kind of clear touches in the market or some kind of signal to show that, okay, there's a resistance level up here. And then essentially you just wait for the market to come up to those levels. Right here, did a smaller reversal off that level. It's come up here again, and then you can kind of bet that the market's going to go down off of it, and currently the market's kind of sold off from that level there. And so what I would then do is go into a 1-minute chart, look for a couple signals, and kind of a 5-step framework checklist that I've created to simplify the entries into these patterns. So to show you what a real example of this looks like, let me walk you through a trade that I recently took using this exact strategy, and I'll show you the 5-step checklist framework that I use pretty much every trade I get into. And again, the first thing is looking for either that resistance or support level off of that larger time frame. We kind of just walked through that. And again, that's usually just looking for, a couple swings. And then when the market comes up again, like we are right here, looking for a couple key things to jump in, betting that the market's going to go down. And so this trading strategy, you can bet that the market's going to go up off of a support level, or like we are now, you can bet that it's going to go down. And I actually have more success betting that the market's going to go down. I don't know why, but over time, I've just seen myself more successful with that. And then the next thing is making sure that uptrend is actually broken so you can expect that the market is going to reverse. You often hear that the trend is your friend. And so if the trend is still showing that it's going to continue higher, well, you don't want to bet that the market's going to go down because then you're attempting to go counter trend. The whole idea is to try and predict and have reasons to say that, well, I think the trend is ending here. You can see it start to kind of fizzle out here, and then you can bet the market's gonna go lower. And so an easy way I do that is just drawing a trend line and then also looking at the swings in the market. The market pretty much just makes higher highs in an uptrend, and then when it switches, it starts to make lower highs. And so here it starts making lower highs, and the lows start getting lower as well. And so that's kind of that trend shifting confirmation that I really like to look for. And then the fourth thing is looking for that market to essentially make one of those lower highs here. And it actually does it right here before the trend is broken. And so if you ever see that, this can sometimes happen, is I wait until it essentially breaks that trend. And then you can see here, it made another lower high, and that's plenty good confirmation to still get in on. And then the final thing is you want to see a strong reversal candlestick, really confirming one of those lower highs, because you don't want to get in like right here. If you look, this is kind of a weak bearish candlestick. It's a doji. It's just, there's a lot of chop going on right here. It doesn't really show you strength and conviction that the market could continue lower. Now it totally can off of that, but it's not a really good confirmation. Versus right here, you can see the market, essentially if you look at these two candlesticks, the market basically did a big move up, kind of pulled back a little bit, and then it goes to the next candlestick. That's pretty much in the one candlestick. And then in the next candlestick, it opens up here, tries to go higher again. It goes a little bit higher and then reverses lower a lot. And so that's a strong move of essentially the market making a mini double top and reversal. And so that's where I jump in. I jump in right kind of at the break of that candle and then bet the market's gonna go lower. And I just put my stop kind of above here as, you know, a good spot based on just the market making these lower highs. Because, you know, if it's gonna keep going higher, you're wrong, that's totally okay. But like we talked about in the beginning, your risk reward ratio is really favorable because you're risking about this. And if I try and, you know, make that about the same size, you can see I'm already about up 2x. Down here is 3, you could go to 4, because again, you're catching those potential swings in the market. And the swing, if we look over here, just looking to the left of the chart, there's kind of a double bottom here, kind of a larger head and shoulders. That's probably where the market might bounce, right? And so that's a lot of good room to profit. And so that's kind of a hidden checklist item that you really want to look out for as well. Is there actually room for my trade to make me good money? Essentially, is there good risk reward potential? Because if there's a support level right here, well, yeah, you can kind of get a little bit of a trade here, but is it really worth the risk of, you know, the initial risk that you put on jumping on into the trade? You want to make sure these things line up really well, because I only take a couple of these every week. That's what trading's all about, is waiting patiently for things to line up perfectly, because then you can jump in on a trade and you can get really good risk reward and potential consistent profits from doing it. The hard part is patiently waiting for your one strategy to hold up. And that's what this challenge is all about. And so just to quickly talk about this strategy is how I manage it is, well, I moved to break even kind of when it started going in my favor. And then you can see now here is we're in a tight downtrend. And so my thought is, well, we're kind of getting near the lows and the market's gone really well in my favor. For me, once I get up to about 3 times my risk, I like to trail up my stop and jump out when it breaks the previous candlestick high. And so that's kind of what it does here. And it's a really nice profit. Every trader out there loses thousands of dollars making these mistakes. If you can avoid each one of these mistakes, you will be light years ahead of every trader out there. These are mistakes I constantly see failing traders making, and I myself have had to overcome these mistakes to become a consistently profitable trader. So the first thing most people figure out is when you come to trading, you have to have a trading plan. Now, the biggest mistake though that I make sometimes, and I see a lot of people doing, is not actually following that plan. Is you follow it most of the time, but there's times when you slip up following it. You have to stick to your plan rigorously. That is the thing that is going to keep you profitable and consistent as a trader, is because you spent all this time building a profitable plan, or a plan that theoretically should be profitable, and you have to give it time to actually work out. And for me right here, to show you an example of this mistake I was making, I had number 2 of my checklist work line up and I had number 3 of my checklist, but there was no real support level down here that I was looking for. I really was just seeing, hey, the market kind of came in this downtrend and it's kind of chopping here. And so, you know, I FOMO'd in wanting to jump on this level, thinking, oh, well, you know, maybe I don't have a support level here that I've drawn from before, but maybe it'll still work out because I have 2 and 3 of my checklist, but I don't have 1. And you have to have all of your plan line up to signal a trade. Otherwise, you're just randomly trading, and you cannot be doing that because that's not repeatable. And you have to have something that you can consistently repeat in the markets to be consistently profitable. And of course, when you do something like this, it's always going to turn out to be a loss. Maybe you'll get lucky a couple times, which is really bad because it'll reinforce you taking a bad trade because, well, you won, so maybe it wasn't a bad trade. But in reality, you have to stick to your rules, or you're going to end up losing a lot of money and waste a lot of time. So to walk through another big mistake, an example is, well, this one, I'm following my plan. I have a support level. The downtrend is broken. There's even a little one right here that's broken. And then there's a nice candlestick entry pattern. But the biggest mistake I see people make, and I'm making here, is if you look at the market, see how the market is acting. If you look at all of these candlesticks, they are very, very static. stacked on top of each other. There's a lot of back and forth and choppiness in the market. And so because of that, you have to realize that if the market's going to make a big swing like this in one direction, it's going to be very, very hard to capture that movement, because even if the market does go in your favor, it's going to have a lot of back and forth. And when you're at kind of the lows like I am right here, trying to catch a reversal to the highs, and because the market's choppy, it's more likely that you get false signals because the market's just going back and forth and chopping around. And because of that, it's also likely that you get trapped or the market just doesn't work out, because it's more likely to just kind of stagnate and sit there versus giving a nice swing in your direction. And because of that as well, it's hard to capture a big clean move in the market, because it's likely that even here you can see there was a massive sell-off here, but because the market's choppy, it's likely to just reverse that back up and continue to sit there. So even if a move happens, it's unlikely that you can easily capture that move. Now, one of the hardest things to grasp in trading is when you take a perfect looking trade, it lines up with all your rules and it just doesn't work out. Right here, this trade is awesome. There is a resistance level up here, the uptrend is broken, and there is a really sick reversal candlestick right here. And so I think for me, for my strategy, I think this looks amazing for the market to break going lower, because we've had a nice trend break. It's kind of lost some steam. It made one more attempt to keep going higher. And then there's massive rejection right here from sellers. And so I think it's very likely that we keep going lower. And I would take this trade every single time. But sometimes the market gives you a signal, it looks really good, and it still doesn't work out. And that is totally part of trading. You have to accept that you are going to have losses, even on the best looking trades. And so that's why you have to have really good risk management when it comes to trading as well. You want every trade to be the same size, because if I saw this trade right here that looks amazing and I thought this is 100% guaranteed to work out, the moment you start thinking that, run away. And if I bet, my whole account on it, well, there's a chance that it doesn't work out. And this trade does end up being a loser, even though it looks so good. And I would take this trade every single time. But again, that's a part of trading. And if you didn't have good risk management and sizing, you would end up losing your whole account. And that is another mistake people make, is they go too big a size on certain trades. You want to have good risk management with your trading, because not all trades are going to win. That's a part of trading. Again, we're in it for the long haul, the numbers game. You want to be consistently profitable over 100 trades. And of course, some of those are going to be losers. And that is totally okay, because again, that is just a part of the game trading. Now, this mistake right here plagued me for years, and this is why I have my checklist of entering. We have a good resistance level up here. The uptrend is broken, and there's kind of a good signal here, but it's jumping the gun on a trade when you see the potential coming, right? When you are trading, you want to have a plan of what you're looking for. And when you see that plan starting to align up of 1, resistance level, and 2, the uptrend is broken, looking for a reversal, well, you start to get antsy and say, okay, all we need is one more thing. Just need the final confirmation. We want a good bearish candlestick, and you can jump the gun when not everything is quite aligned. And it can cause a lot of consistent losses because you're just getting in too aggressively in the market. And it can be really, really frustrating doing that versus waiting for that actual strong confirmation that your plan asks for. For my plan right here, this candlestick didn't really show enough of rejection of that level because it didn't even give back this green bullish bar, right? In reality, it was just a little pullback in this uptrend we had. But here, this candlestick, we had some consolidation with these two candlesticks and then a massive rejection candlestick. And that's when I got in on a short, betting that the market was going to go lower. And that's what you need to be looking out for when you're trading, is anticipating that a trade is coming and sitting on your hands and knees until everything aligns up properly. Because I have made so many mistakes where I see a potential trade coming. I'm theoretically correct because in hindsight, I see the market go down, but I jump in too early, and it can be extremely frustrating because I'll jump in, take a loss, be upset with myself, and maybe just be done for the day. And if I waited just another literally 5 more minutes, the actual trade would have set up. And so that is something that is extremely hard to do for me over the time of trading is just wait another 5 minutes for that final confirmation, because generally those are the best, cleanest, and easiest trades to end up taking is the ones that look insanely strong, not the ones that look pretty good and they might work out. If it's going through your head that, hey, this looks pretty good, it might work out, it's not a good enough setup to be taking. You want to be taking those trades that you see that line up perfectly and you're like, wow, this trade looks amazing. I have to get in this right now because it fits my strategy perfectly and I patiently waited for it to set up like this. So here's another trade I'm in, and this one actually ends up becoming a winner, but I lose out on hundreds of dollars because of the big mistake I'm making here. And it's one that I think a lot of people potentially do when they're trading. And it's getting too greedy when it comes to your trades. When you see them work out, you have to take your profits when the market's telling you to. When the market was up this high, I was up 3 or 4 times my risk. I was up $500 or $600, and that's a great amount to make on a trade. You cannot get greedy trying to say, okay, well, maybe the market will pull back here and then go all the way up. Just take the easy money and get out. You're going to lose a lot of money trying to give the market a lot of wiggle room in your trades, hoping that it maybe does some crazy move that you can catch and you can get a home run. Just go for the quick, easy wins and make a lot of money that way, because again, consistently making 3 or 4 times your risk is going to make you insanely profitable in the long run. Another mistake that I made was looking at stock chart patterns and thinking that, oh, I could just learn these and the market will fit them and I'll be able to know what the market's doing. And the market really never fits these patterns in real time. It can be easy to spot them in hindsight sometimes, but when you're actually reading the market, it can be pretty hard to spot these. And quite often, even if you see them, they don't necessarily play out that way. And so what I found is the most important thing is just learn to read the candlesticks of a chart and understand trends and the nuts and bolts of just what those are telling you. And you will be able to know way more about what the market is doing than just trying to match pictures of potential chart patterns onto your chart. What took me from making $200 a trade to making $2,000 a trade wasn't my strategy. It was something that most traders aren't even aware of. I'm going to lay out everything that I have learned in the journey from becoming a profitable trader, then scaling up my size. By the time you get to the end of this video, you will know what you need to focus on to succeed in trading and the steps that you need to take to reach your goals. Now, there is something in trading that is completely counterintuitive and causes failures and frustrations all the time in traders. In society, we learn if you work harder at something, you will become better and better. Working 12 hours a day and something like 7 days a week, you will become a master in no time. You will get ahead of others and become successful. But when it comes to trading, it doesn't exactly work like this. Initially, when you first start, studying for days on end and looking at charts will get you ahead in the learning curve faster. But it hits a point where slamming more hours into it just doesn't work. I used to solely focus on trading. It was the biggest focus in my life, and I wanted to become successful as fast as I could, so I traded every day for as many hours as I could and studied the rest of the other hours that I was free. Now, what this does is it puts so much pressure on your trading. I would go into every trading day with expectations that I was putting so much effort into it that I should start seeing results quickly. But after I got through the initial learning curve and I was focused on executing my strategy, it put pressure on every trade to succeed. Every trade had to win, and if it didn't, it was just another result showing that I was failing and not able to succeed. That all the hard work wasn't getting me anywhere. And even if I traded for just a few hours in the morning, if my trading went good, I would be happy for the rest of the day. And if it went bad and I lost money, I would be in a bad mood the rest of the day, because the way my focus was that all that mattered in the day was my trading. And so to fix this, instead of trading being the main key focus in my life, I changed it to just being one of them. What changed things for me was creating other things to focus on, taking the pressure off of trading. From talking to other aspiring traders, pressure is a massive influence on their results. One of the biggest pressures is money. Most people get into trading for the income, that it can generate. But I've learned through teaching, the more desperate you are for money sooner, it adds more and more pressure to your trading. Trading is a long game, and your results can be measured only over a year span. A consistently profitable trader can have losing weeks or losing months, but over the year, they are successful. This is why if you have pressure to make money quickly from trading, or even have a timeline of when you want to make money trading, it'll put that much pressure on your results to be positive, and will in turn force you to make impulsive trades in spots you shouldn't even be in. Think of it like this: probably the most impactful trait you have in your trading is patience. If you were a millionaire and didn't need the money at all, and the sole goal of trading was to consistently get in a trade when you felt in tune with the market and the strategy set up perfectly, you could wait until that exact situation showed up, which could be days, weeks, or even months depending on the person. Then on the flip side, if you need money tomorrow, you would likely be trying to get into a trade no matter how you felt or how the market looked right now. Instead of waiting for the market to fit your plan, you would be trying to react to what the market is doing and fit around it. Now, most of us are somewhere in the middle of this spectrum, but sit down and spend some time really thinking about where you are on this spectrum, because the farther in the direction of I don't need the money spectrum, the less pressure your trading will have on it. And the farther in the I need the money right now, the more pressure your trading is going to have. Now, I don't think anyone would trade if there wasn't money involved, so don't think that you can't get rid of that. Instead, the thing to focus on is how important it is for you, because if there is a lot of pressure on you, you need to find ways to try and alleviate some of that pressure. Either do something that helps create money sooner to fill that need right now, and have trading be something that can, in the future, become fruitful. Or work on rewiring your brain that you are working on something that will become successful in the long run. It could take years down the road, but once you get there, the effort will be worth it. Take that time expectation off of your trading. Trading can size up insanely quickly. You could be making $200 a week from one trade, but then a year later, you're making $2,000 a week one trade because you've now sized up 10x from that one trade. This is where I was a year and a half ago. I was making about $200 a trade, and I was focusing on the process and everything else about my trading. And then as I've got better over time, I realized, okay, now I can start to size up, and this can become something that is actually very, very powerful. Where trading becomes exponential is the amount of money you can make from each trade, not from the number of trades you take. Even if you took one trade in the whole year, but made $100,000 from that trade, that's all you would need. Here's an analogy that blew my mind when I first heard it in trading. In poker, the best two starting hands are 2 aces, 2 kings, or 2 queens. If you were able to bet all your money and have someone match your bet every time you had these hands, you would consistently make money, and in the long run, make millions. Now, this doesn't work in poker because you're playing at a table with people. Most people will catch on to what you're doing because they're watching what you're doing. But in trading, no one is at the other side of the table keeping track of what you're doing. In trading, it doesn't cost as much money to watch the market compared to in poker. You have to pay the blinds or the antes to play. And in trading, you can sit and wait for your 2 aces every time and only put your money and risk when you get them. The only hardest part about this is the waiting game. In poker, you have about a 0.45% chance of being dealt 2 aces in your hand. So the odds are really tiny. So you have to see a lot of hands to even be dealt it, and that can take hours on end. But remember, every time this happens, you make money in the long run, and so the logical answer is to wait for that. But like with poker and trading, sitting there is really, really hard to do. And if you can learn to wait, it will pay off. One thing that's really helped me is I used to trade for hours and hours on end, and that patience would be really, really hard to do. And recently, what has really changed this for me is focusing on only trading for an hour to 2 hours a day, because that's when I can focus on being patient and then just move on with the day. Because just looking at the charts and doing just that is really boring, especially when there's nothing going on or you see the potential for a trade to go on. And so I can only be patient for a short amount of period of time. And so that's what I've done with my trading. I've allowed myself to only trade a short period of time, so then I can be patient, and then I just move on to the next day when I've taken trades or that time runs out. If you go into every trading day focusing on that, of practicing patience, it will drastically change your trading, because this is what the majority of people can't do, which is keeping them from being profitable. If you can master patience, you can make money trading. You want to go into every trading day focusing on your plan for the market. If the market doesn't fit that, you don't take a trade. A massive mindset mistake beginning traders have is a goal for a certain amount of money or trades in a given day. I struggled for the longest time with the idea of having a trading goal, with either the amount of trades I wanted to take or the amount of money I wanted to make. But these all put pressure on my trading. If you have a set number of trades you want to take in one day, but the market isn't a good trading condition for your strategy, you're going to be forcing bad trade setups that day. Or if you have a daily dollar amount you're looking to make, you're putting massive pressure on that day to have good results. Even if you have a week or monthly goal, you're putting massive pressure on your results. Honestly, having any result-oriented goals isn't good for trading. When I started to find some success at trading, I had a goal that when I hit a certain amount of size, I would increase my trading size. Sounds totally fine, right? But what happened, which I only found out by going through this process, is that as I got closer to that goal, I started to focus on my results. It got in my mind that I only needed a couple more wins to get to my goal, and I would get to size up, which is exciting in trading. Sizing up is a sign of success. But this goal had changed my focus from being focused on the process to the results again, and it started to damage my trading. I realized this and dropped the goal and instead put a timeline in place, because I felt confident in my trading that I had been getting good results, that in a couple of months at the end of the year, I would size up. The other big key involved with this was I mentally felt ready to size up as well. I wasn't nervous about the size of my trades anymore. The risk of the money didn't scare me anymore. It was more normalized. This is a big key to understand, because when you increase your size, it adds more pressure on your trading, and pressure is what we are trying to focus on minimizing here. Now, on the flip side though, you don't want to have zero pressure on your trading. In college, I would play poker with my dorm mates, and when we first started out, we didn't put any money up. So if you lost all your chips, it didn't really matter. What this did is people didn't care about what they did. They would go all in, betting all their chips on really bad hands because it was funny. They weren't taking this seriously, and I wanted to take this seriously. And so I got tired of that, and I got us all to put up $20 at stake for the game. Immediately, the stakes were all high for us, and nobody was randomly going all in. We were all focused on doing the best we could to win. This is the same thing with trading. You need a certain amount of pressure to take it seriously. There needs to be a reason to take only trades you want to take, not just randomly betting for fun. When you first start trading, it's important to practice on a demo account because everything is so new and you're getting used to a strategy, and that takes time. It would be dumb to go right into trading real money because statistically, everyone loses money when they first start out. But once you get a solid grasp of things, you need to up the stakes, because otherwise you will end up wasting your time being like my dorm mates, randomly all-inning on your demo account because you're bored. You will start actually building bad trading habits that will later down the road take months to rebuild. By now, I'm sure you can see that to succeed at trading, it isn't about solely learning a strategy. Learning to read charts and patterns is really fairly easy. Most of us can recognize patterns. Humans are good at that. The biggest thing with your strategy though is try to keep it simple so you can get it down and focus on what actually holds most traders back from being successful. I've taught a ton of traders my strategy, and what holds them back is always the mental side of their trading. You have to work on what most people aren't willing to do. Most traders are just looking for that easy, quick fix of a strategy or indicator that tells them what to do or that works all the time and tells them when to buy and sell. But these don't work, and that's why most people fail at trading. My goal is to break you free from that losing cycle into the profitable percentage of winning traders. Now, because in trading, everything is really emotional, think about a lot of reasons why you make emotional decisions in your trading. As humans, we are actually programmed to avoid pain and go to things that feel good. This is why fear and avoiding pain is generally the emotion that controls most traders. The fear of missing out is to avoid the pain of money you could have made. Taking profits too early is to avoid the pain of giving back money you made. Not closing out of a losing trade is to avoid the pain of being wrong. Or not entering into a trade is to avoid the pain of being wrong. These emotions seem really simple, but when you really reflect on them, they can be complex and interconnected. For an example, my biggest emotional barrier was I didn't even enter into a trade because I wanted to avoid the pain of being wrong. I would spot a trade and get nervous that I would be wrong and lose. So I'd then skip the trade and I'd watch as the market profited without me. I'd feel like a complete idiot because I had just chickened out on getting into the trade. I spotted it. I knew where to enter. I just couldn't pull the trigger. I'd continue to trade and the frustration of that loss would loom over me. I'd spot another potential opportunity, but it wasn't really good enough for a trade. But out of frustration, I would jump into the trade, not wanting to skip out on another win. Strategically, these trades are completely separate, but emotionally they were connected. If I was able to accept that I was nervous and just get into the first trade where I actually really liked the setup, I would have actually won and probably never got into the losing trade because I wouldn't have felt that emotional frustration. I was able to change this over time by realizing that it's okay to feel nervous to get into a trade. You can just accept that the nervousness is part of trading and it's okay to feel that emotion. The big key is to not let those emotions control your actions. That's the biggest thing that most traders struggle with, is their emotions are controlling their actions. You can't be an emotionless robot and just not feel any emotions. That's just not how we're wired. But what you can do is accept an emotion, feel it, accept it, and then just decide to do something else. Just because you're scared doesn't mean you have to run the other direction. For you to succeed at trading, once you have your strategy nailed down, you need to realize what emotions are coming up when you're trading, why they happen, and what you can do to either accept them or reframe things to take them away. This is something that can take an unknown amount of time depending on the emotion, because these can be so ingrained into your subconscious. They are habits and patterns that your brain has learned over time, and your goal now is to work to rewire them. When I first started trading, I struggled to find consistent success. I would have success at times, but I wouldn't be able to consistently keep the profits I made. And it just felt like I was gambling in a casino. It took me 4 long years to realize that I would consistently be in this losing cycle until I made certain changes that I'm gonna reveal to you in this video. Once I started to make these changes, I saw my profit graph go from consistently losing money to consistently making money. Every trader that eventually becomes profitable has a similar story to this. Yours might be slightly different, but if you listen closely to what I'm about to tell you, you will be able to take actionable steps that will improve your trading no matter where you are in the trading journey. Consistently, I would find myself in situations where I'd spot a great potential trade and I'd end up getting scared that the trade might end up being a loser. I would then skip the trade and watch as the market would just soar off in the direction of that trade without me. And so instead of making a few $1,000s, I would end up making 0. And I'd always feel like a complete idiot. I'd then continue to watch what the market was doing, and along comes another potential trade. But this time, it's not as good of a trade opportunity, and I know I should just skip it. But maybe I'm just being scared, and I should just toughen up and get in. I don't want to make the same mistake twice, so I jump into the trade, and this time it fails, and I lose money. If you've been in this exact same spot, you know how frustrating this is. Because of that loss, now you start doubting yourself. You start beating yourself up. And I would get even more triggered. I either leave trading for the day, quit it, and I would have, a dark cloud over me the rest of the day. It would kind of ruin my day. Or even worse, I would actually end up stay trading and start revenge trading and take even more losses. Even if you're dealing with this with your trading right now, I have answers for you. Let's talk about a few key takeaways from that story. First, you need to understand how your emotions are affecting you. Understand what emotions you feel when you're trading and how you impulsively act based on those emotions. If you don't have an idea of what they are, then you won't have a chance to be successful at trading. Second, your emotions are all connected like a web. The first emotion I felt there was the fear of the trade not working out and me losing money. I then got frustrated with myself because I skipped a massive winning trade that I knew I should have been in. And then on top of that, I took a trade that I knew I shouldn't have been in and created a loss. So now in these situations, not only are you not up money, but you're actually down money on the day. This is why one simple change can have a drastic effect on your trading results. If I was able to jump in on that first trade, the cascading effect that skipping it wouldn't have happened. So what you need to do is start to write down your emotions when you're trading and how you react to them. How do they cascade into each other? Because this is how you start to build a foundation of your emotional web, and you'll see how everything is connected. Now, because you'll start to find you have a lot of emotions that are negatively affecting your trading results, let me tell you how you can fix that. Let's talk about habits real quick. Common habits that you're used to is something like going to the gym once a day versus going to the gym every other day. This is a very tangible habit, but our emotions actually have habits too. Our brain naturally gets into habits of how it emotionally reacts to situations. Just like my story about the emotional path I go down after fearfully skipping the first trade. This is a bad habit my brain had, and I had to figure out how to change it. You have mental habits that your brain repeats over and over. Some are good habits and some are bad habits. The key is to finding ones that are negatively affecting your trading and change them. This takes a lot of hard work. Now, the steps to actually fixing this is initially, you just need to become aware of them. And as you become aware of them, over time, this awareness will get stronger and stronger. In the beginning, you will still notice these habits and reactions that you have in hindsight, but slowly, just like I did, you will start to notice it earlier and earlier until you can stop yourself before you act. For an example, when I was scared to jump into a trade, I eventually started catching myself in real time wanting to skip that trade opportunity. I then remind myself that it's perfectly normal to be scared or nervous about getting into a trade. There's so much unknown about it, but I wouldn't let my emotions control my actions and skip the trade like I had done in the past. And so this is how you can break the negative habits that are affecting your trading. So I would then take the trade and not let my emotions control my actions. That's the key here. You can feel whatever you want when you're trading, but you can also decide how you want to react to those emotions. Just because you feel angry at someone and your first instinct is to punch them in the face, it doesn't mean you have to do that. You could decide to kiss them instead, even though you're angry at them. Now, this is a great start to change your trading for the better, but I eventually realized that just understanding how your emotions affect you and the patterns they create wasn't enough to be consistently profitable. There's still a big key to the puzzle that you need to be able to take your trading to the next level. So I used to have days where I felt like I was trading flawlessly. An emotion would come up and usually that would trigger me and it didn't seem like a problem. But I couldn't understand why. Some days I would trade perfectly, then others it would be an emotional roller coaster where I was chasing trades, impulsively jumping into them, or even revenge trading. These days would usually wipe out all the gains I had on days where I was trading really well. And as a fellow trader, I know this has happened to you, and here's why. Pretend that your body has a battery. When you're well rested, like after a restful weekend or vacation, your body battery is really full. You are more likely to have patience to deal with frustrating things. You know, going back to the example, somebody screaming at your face is easier to deal with. You know, you don't feel the need to punch them in the face. Versus after a long draining day at work, your body battery is really low. And it's much easier for you to get pissed off at that person yelling at you and impulsively punch them in the face. What I eventually realized though was this is the exact way your trading goes. On days where you are trading flawlessly without impulsively reacting to your emotions, your body battery is generally very high and you're really well rested. And days that you aren't rested and your body battery is really low, your emotions will really easily take control of you and you'll act impulsively. The key here is to start to become aware of that and where it is in relation to when you're trading and how it plays into your trading. If you think about it, why not only trade at times when your body battery is high? Let me show you how you can use this to become extremely consistent when you're trading. Eventually, I realized that my trading results were correlated with my stress and how rested I was. When I wasn't stressed and well rested, I would have good trading returns. But when I was stressed and not sleeping properly, I would be more likely to make a bad trading decision and it would end up causing me to lose money. But you have to know when you need to take a break and reset your body battery. This can vary on how drained you are. Sometimes you need just a good night's rest to be ready to go the next day, and other times you need a whole week's vacation to get back to normal. This is something you'll get better at understanding over time, and it's something I'm still working on myself. I've actually noticed that I have what seems like a boom and bust cycle where I am really in the zone trading and I'm being consistently profitable, and then I'll overwork myself and my body battery will become really depleted, and I'll still continue to try and trade and I won't reset properly. I will start to make consistent, trading mistakes. The key though is to be able to reset and take a break before your body battery becomes so drained that it negatively affects your trading. That's the key here. Trading will always be there. The key is to be there when you are ready to trade. The only thing you can really control in trading is when you jump into a trade. The outcome of the trade, what the market's doing, they're all completely out of your control. So every time you sit down at your desk to trade, you better be at peak performance levels, because trading is a war and you better be ready to fight every single time. You wouldn't show up to fight tired and not able to give it your all, right? That's the great thing when it comes to trading, is you can choose when you want to show up to fight. A really big realization I actually had was even the most successful traders out there that are making millions still have ups and downs, and they're not emotionless robots that execute their strategy perfectly. They still have negative emotions that they have to deal with, and ups and downs, and you will have emotions that negatively affect you. But if you are able to trade only when you're well rested, the impulses that you have based on those emotions will be manageable. Over time, you will be able to slowly stop reacting to those emotions, change the habits that are negatively affecting your trading, and switch them into positive habits that will cause you to be a consistently profitable trader. Here's some amazing trading advice from 6 coaches that will take your trading to the next level. Let's get into number 1.
Too many people are looking for that easy solution, and the reality is, as we know, it's not that straightforward. What we have to do, and that first point there, is embrace rejection. We have to get used to, like we're talking about being hardwired, get used to taking losses. And yet most people almost can't accept that. Even if you said to someone, I can give you a strategy which has, I don't know, for argument's sake, a 60% success rate, and they would be happy while sat in this room with you, saying, yeah, okay, I'll be happy with that. As soon as they go through those losers, that's it. Then they start to hesitate and they start to second guess and make all of those decisions, which all of a sudden makes them underperform the strategy. So yes, I'm a big believer that it takes time, and embracing rejection. I'd always say to someone, look, you've got to accept taking losses. Don't get so all-encompassed in that one trade that you're taking right now. This one trade you're taking right now is just one trade in the next 1,000 trades. Try to put it in perspective and actually minimize the importance of the very next trade that you're taking. And it's all those sort of little tricks that a trader can take to help at least. It's easy for me to say it. I've been there and we've been there trading for years. But at least if they make some little notes of this sort of thing, then it might actually help them.
Now, trading can be a difficult profession. For that, we sit in front of our computers all day long, and we feel unproductive if we're not always in a trade or pushing buttons. We follow traders on Twitter who tweet a new idea or ticker every 35 seconds, and we say, hey, that guy trades 80 to 90 tickers a day. I need to do the same thing. No, I think that's BS. I think you should not do the same thing. I think you need to stick with your high probability setups, the setups you know you're going to be profitable on. I'd say at least 75, 80, hopefully 90% of the time. Now, sometimes it can be hard to sit on your hands and be patient and wait for those setups. But why chase subpar setups? Why chase boredom trades? Why put good money after bad? Now, how many of us here of traders have followed a chat room, a Twitter, or a friend into an idea that we knew was not a high probability setup for our own trading style? Now, we all have different trading styles here. What works for you may not work for me. Personally, I'm a terrible long bias trader. If and when I ever do go long, I take profits extremely fast, knowing that a lot of times profits can just get away from me pretty quick. I don't have the patience nor the conviction, to hold them. That's why month after month, year after year, I personally get more strict about the trades that I place. I probably place half the amount of trades I did maybe just 5 years ago, but I make way more money. Why? Because I trade the high probability setups that I know I'm gonna be profitable in 80 to 90% of the time. I like to use size with those trades, and I have very strict rules when it comes to cutting losses.
FOMO is an anxiety. FOMO is a fear. Fear and anxiety occur when we perceive threat. The problem, this is a very important concept, the problem is not that we have missed a potential trading opportunity. The problem is that we perceive that to be a threat to us, to our success, to our future. So once something becomes a threat, we go into stress mode, and literally our brains respond with what's known as a fight or flight response. We're priming ourselves for action. How do we do that? The blood flow, if we were in a functional magnetic resonance imaging machine, we would see the blood flow in the brain go from the frontal cortex to the motor areas of the brain, priming us for action because we're perceiving an emergency, right? Now, what goes on in the brain's frontal cortex?
Higher level thinking?
Higher level thinking, judging, planning, all the things we're supposed to be doing when we're trading well. The blood is flowing away from those regions of the brain into the action areas. So as long as we perceive threat, we're going to be shifting our blood flow to a more impulsive, action-oriented mode rather than focusing our mind. The key to overcoming fear is taking the threat out of the situation. We're always going to miss opportunities. Where have some of the biggest opportunities been recently in financial markets?
Crypto?
Yeah, in crypto, some big moves. Guess what? All of us missed every one of those moves. Why aren't you upset? If you're afraid of missing out, you missed out on some big moves. Okay. You can only trade what you focus on, and none of us has perfect focus. So we want to take the threat out of that, which means we want to normalize that.
To build discipline, folks, you're going to have to grit your teeth and stick to the process. So the first step would be to sit down with one of these guys, sit down with Vusi, put together your trading plan, a simple mechanical plan. The more mechanical, the better. And then my challenge to you folks is to follow that plan without deviation for a batch of somewhere between 20 and 30 trades. That's going to take quite a bit of doing. It is a rite of passage. Now, I'm not a psychologist. I've had psychologists in my classes and they still don't know why this happens. But to build a habit, okay, any habit, you've got to grit your teeth and do it. And then all of a sudden, you actually build this neural pathway between your ears by doing it. You're going to find that sticking to the rules for the first few trades is difficult. Somewhere between 5 and 13 trades, you build the pathway. And you'll find that the discipline to stick to the rules is no longer required. Because that's what you do. So my challenge to you all is out of this, get busy, make a nuisance of yourself, get yourself to a point where you've got a written plan that suits you, it should not be more than 1 page. And then the real exercise is to focus on perfect execution of that plan for somewhere between 5 and 20 trades. The one thing that I can say which is positive, that everybody in this room is 8 to 13 trades away from the trader you want to be. That's all.
Most trading mistakes made by beginners, even intermediates and occasionally even advanced people when they lose their heads is to do with trade sizing. So they take a loss too big. There's no damage done in taking your managed loss. That's part of the game and being wrong. The problem is that recovery ladder when you then emotionally negatively respond to taking an already slightly bigger loss. So let's say you lose 15 or 20% and then you think, damn, I want to get back to where I was, so I need to make 25%, so I'll trade bigger again, I'm sure I'm right this time. You can't cope with the mental, it's like a mental cognizance dissonance, cognitive dissonance that makes you need to get back to where you once were, because you're now seeing yourself as the lesser self as dictated by this balance. And that then pressurizes you into trading bigger again on what looks like a sure thing. But now you're punch drunk because you must find an opportunity quickly. And it's not a sure thing. It's the first thing you grabbed hold of that best represents a possible trade. So you then bastardizing your criteria to grab hold of something that you expect to leverage you back into where you once were. This is a very big fatal spiral, because once again you then overtrade because you've got to make back more to get back up, and that's the recovery ladder concept, and boom, that is probably the single most destructive that sees someone have a £10,000 account reduced to, you know, a few hundred or £1,000 and then virtually giving up, realizing that they've blown it.
Learning to trade without fear, hesitation, or internal conflict is a function of believing that you don't have to know what's going to happen next on a trade-by-trade basis to win or make consistent money. This is the heart of it right here, everyone. Okay? This is the heart of it. But eventually, what you're going to do is get to the point where you believe that you do not have to know what is going to happen next on a trade-by-trade basis. This trade and this particular trade and this particular trade, you don't have to enter these trades thinking that you know what's going to happen next to win, to make consistent money. And that when you stop believing that, you will start making consistent money. Because it's your expectations about this trade winning that's going to mess you up. Go ahead.
What you're really saying is you have to have a belief in your plan or your methodology, and you're looking for a probabilistic result, saying over a period of time, I will execute 60, 70, 80% of my trades. The one I'm going into now could be a good one, could be a bad one.
That's right.
I don't care.
That's right. Exactly right. Perfect. Thank you. Thinking, assuming, or believing you know what will happen next creates an unrealistic expectation in a specific outcome. What's wrong with an unrealistic expectation? Well, think about, let's say, expectations in relationship to the characteristics of humanity. This cuts across everybody and cuts across all cultural lines or barriers. Everyone, well, first of all, before we can get to that point, what is an expectation? An expectation is a mental representation. In other words, a belief, an assumption, or an opinion or whatever, thinking, assuming, or believing, a mental representation of what the next moment, meaning next moment, next 5 seconds, or the next in 10 seconds, or the next hour, or whatever, is either going to, in the environment. In other words, we have a mental representation and we have an external environment that expresses itself, okay? So my mental representation, meaning my expectation, if the environment shows up in a way that is consistent with what I believe, then what will my state of mind be? This is a universal characteristic of humanity. This isn't any different with anybody, anywhere. How will I feel? What will be my state of mind? What will be my experience? I'll be in a state of satisfaction, a state of well-being. I could be joyous. I could even end up in a state of euphoria. The degree to which the environment does not express itself in a way that's consistent with the way I think it's either going to look like, sound like, taste like, smell like, or feel like, okay? I will be in a state of dissatisfaction, a state of betrayal, disgust, anger, fear, terror, Your ability to create consistent results as a trader is all about what you expect. When you change your expectations to be consistent with the way the environment, the market environment exists, the fear will go away. When you change your expectations in a way that's consistent with the way the actual market environment exists, your fear will go away. And you'll be able to do exactly what you need to do when you need to do it without conflict, without hesitation, and be able to close that profit gap between what your methodology will give you and what you end up with in your bottom line.
I've had a trading coach for the last 3 years, and it's been the most ROI positive thing that I've done in my trading and my life. And so in this video, I want to walk you through the 9 most impactful lessons that I've learned from him over the years. Now, a bit of backstory on Evan. He has 25 plus years managing and trading money, and he has ran trading floors with over 100 plus traders. And now he coaches some of the top hedge funds in the world and professional athletes, and still runs a small fund of his own. And somehow I have been lucky enough to land him as a mentor. So let me pass on to you what he has taught me over the years on what it takes to be a consistently profitable trader. The prep you do before you even sit down to trade is one of the most important things you can do in trading. But what are you doing before you go to bed to make sure you're ready for the next trading day? I always used to think that your morning routine and pre-trading routine was the most important prep that you could do. But what was really a game changer for me was when Evan brought up the importance of a nighttime routine. Morning routines help you get the day started, but if you don't even sleep well the night before, then it won't matter what you do the next day. You will still be tired and exhausted. The nighttime for me that we've created starts at 8 p.m. every day. I leave my phone in my office, then I take a hot shower to relax my body and start the production of melatonin, which is a sleep hormone. Then I stretch to loosen my body up before getting in bed. Then I read before falling asleep. Once I started doing this, my sleep got extremely consistent, and I naturally wake up now around 6 a.m. well rested every day. When I first started with Evan, I was trading as long as I could every day because I wanted to catch every trade that the day had to offer. If I wasn't watching the market, then I was theoretically missing out on money. Evan explained that after around 11 a.m. US market time, most day traders actually lose money in the long run. This of course depends on when you trade and how you trade, but the biggest factor in this statistic was that after 11 a.m. is generally when most day traders have been trading since the market opened, which is around 9:30. He explained that the biggest reason behind this is because it's almost impossible to be at the level of focus trading requires for more than a couple of hours at a time. So after about 1.5 to 2 hours, you start to lose that mental focus that it takes to make good trading decisions, and you start making worse trading decisions. So even though trading longer, you get more opportunities to trade, you are less likely to make the right decision and more likely to make a mistake, losing you money. So spend less time trading. You do not need to sit in front of the computer all day long. It will make you more profitable. Every time an athlete shows up to a competition or a game, they are doing everything they can to make sure they are as ready as possible and on top of their game. The biggest mental shift Evan said that was important for traders to become consistently profitable was to treat trading like an athlete. Show up every day at your peak performance. This is where your whole life and day-to-day activities come into play. Like staying physically fit so you're mentally fit, setting up routines before you trade so you're ready to go, or creating that nighttime routine so you're well rested and focused the next day. Just because it's you trading does not mean there aren't other athletes on the other side of the computer looking to take your money. Now, over the 3 years I've been with Evan, we are constantly in a process of simplifying and narrowing down my focus as much as possible. I was always stuck in the idea that to make more money in trading, I needed to make more trades. And over time, I've realized it's the complete opposite. I used to trade multiple strategies, and now I only focus on looking for reversal trades in the market. I used to trade many hours in the day, and now I only trade 1 to 1.5 hours a day. And with my trading, I'm always trying to take less trades less often with the idea that I'm only getting in the best trades possible that are more likely to make you consistently profitable. Evan constantly enforces the idea that less is more. This idea alone started to turn me into a consistently profitable trader. Now, the trades you take are all that matter when it comes to trading. The ones you miss out or skip don't affect your account balance in the end. Only the ones you end up getting into. To get better at this, Evan says it's important to work on something he likes to call being aggressively patient. Intentionally going into every trading day, waiting for the market to fit your strategy is the key. I spent so much time in the beginning focusing on trying to fit what the market was doing. But the most profitable traders are the ones that are patiently waiting for the market to come to them and fit their strategy. They trade when they are ready to trade. They don't chase trades they are worried they might miss out on, even if it means you don't trade for a few days. That's how you can consistently make money when you execute trades. Evan says he's only taken 6 trades this whole year, and it's been his best year yet. That is how patient you can end up being. I used to be scared to jump into trades, and my habit was to skip the trade out of fear. There's a saying that under pressure, you don't rise to the occasion, you actually sink to your level of trading. Trading is the exact same way. We all have habits that can affect our trading negatively, and slowly over time, with training, you can actually change those habits. But this takes time to build and change that muscle memory of that habit that you have. Over time in coaching, I was able to accept that the nervousness to trade is okay. Thus, I changed my habit, and eventually, even when that pressure comes up again of fear of jumping into a trade, I fall to my training, and the training tells me to execute the trade no matter how I feel. Every trade that we take is mathematically separate from the last. Statistically, you can go on massive loss streaks and still be in the normal statistics of trading. The only problem is, as humans, we have emotions and we can't easily separate trades. I don't know about you, but when I take a loss, it frustrates me and affects me emotionally. I'd like to say it doesn't affect the rest of my focus of trading that day, but it does. So even though each trade outcome isn't connected, our emotions connect each trade. Evan constantly stresses the importance of being aware of your feelings during trading. The biggest reason traders lose money is they let their emotions take control of them. So you want to be aware of where you are mentally when you're trading so you can step away when you aren't able to handle your emotions and stop them from negatively affecting your trading. Even Evan, as someone who has been trading most of his life, says those emotions will always be there. Even he has them every day. The best traders out there still deal with their emotions every day, but they have learned to become extremely self-aware and know that when they need to step away from trading. The mindset Evan says every trader should try and work towards is being comfortable with the uncertainty of trading, but certain about your abilities and behavior to act accordingly. You will always have fear, doubt, or nervousness when it comes to trading. Even now that I've been consistently profitable for a while, I always have doubts that maybe I don't know what I'm doing. You never know what the market's going to do next. So instead, Evan says it's important to focus on your mental abilities when reacting to situations that come up in the market. Because over time, it won't matter as much what the market is doing. You will make the right decision no matter the level of uncertainty or outcome. That's all trading is. It's a test of your ability to make the correct decision with uncertain or not all the information over and over. Evan likes to say trading is the hardest game in the world, and that in a couple of hours of trading, you make more decisions than most jobs do in a full 8-hour day. I always thought when the market is open, you should be trading because you're missing out on potential money. But it's actually been the opposite. The less I trade, the better my results. You don't need to trade every day. Take a day off to recharge, because compared to a normal job, making a mistake in trading loses you money. It's not about just showing up and doing the work like a lot of 9-to-5 jobs. It's about showing up to make as good of decisions as you can consistently. It doesn't matter if you can make profitable trades most of the time if you wipe out all your gains with one bad day a week or every month. If you want to start making $500 or more a day trading, there are 2 negative trading loops that you have to be aware of and break out of. If you don't, you will be stuck struggling at trading for years. I see it constantly, myself included, was stuck in these two loops, and they are the whole reason you are probably right now jumping from strategy to strategy, trying to be consistently profitable. And so I want to walk you through what these two loops are and how you can break out of them to eventually becoming consistently profitable. The whole journey of becoming a consistent trader is a struggle in the beginning where you are generally just consistently losing or just not making any money. And once you actually break out of these loops, your equity curve and profitability will go from flatlining to losing to consistently profitable. This is the whole goal that all of us as traders want. And so let me walk you through what these are and how you can break out of them. And so I look at trading as there are 3 stages of becoming profitable. And the first stage is that you are stuck in what is called a learning loop. And so how this works is you come into trading, you first start, you find a strategy you like, and you start testing it out. And so you do this for a couple weeks, couple months, you have some success, but eventually you start to become not consistently profitable with it. And so you stop getting good results, or you're just not getting the results you want. And so then, of course, like logically with anything else in life, you look to go back and learn more. Because generally with anything in life, is if you learn more, you become better at it. So you either look to find a new strategy, or you look to add either different candlestick patterns or other indicators to the strategy. And so then again, you start to test that out. But lo and behold, you aren't getting the results you want. And so you go back to the drawing board of either scrapping everything, trying to find a new strategy, or adding new things to it. And so you get stuck in this cycle. I was stuck in this cycle for years, jumping from strategy to strategy because I didn't find something that worked for me, but I also didn't stop myself from being stuck in this cycle. And so we're gonna talk about how you can break out of this. But first, I wanna talk about the second loop that you can get stuck in, because once you break out of this, you're gonna go right into another trap that I call the self-sabotage loop. Once you learn more about trading, you'll start to realize that there are a lot of emotions in it, especially when you start trading real money. Things can get very intense. You can get emotional. You can start FOMOing into trades, getting nervous, frustrated, impulsivity comes in your trading. And so there's this whole web of emotions that negatively impact your trading. And so all of these different feelings, greed, euphoria, desperation, they make it so you are self-sabotaging your trading. And so let me illustrate what this can look like and what my self-sabotage loop looked like, because you will start to see how this cycle works and how it self-sabotaged me, and it will give you insight to what yours might look like. And so for me, my biggest issue with trading was I had the fear of being wrong. I was scared of a trade losing money during that trade. And so anytime that I would see a potential opportunity come, whatever strategy I was trading, I would start to get nervous when the time came to enter. And so that fear would come in and take control of me. And so then I would skip the trade. And of course, generally, because I'm following a strategy that works, most of the time that would work out. That trade would have worked out, and I would have been able to make a profitable trade. And so instead, because I skipped out on that trade, I became frustrated because I missed out on the money I could have made from that trade, which was frustrating. And so that frustration would stay with me as I'm still watching the charts. And what it would do is I would be sitting there waiting for another trade opportunity to come, and something would kind of start to set up. But let's say if I have a checklist, of 5 things I'm looking for to jump into a trade, 3 out of 5 of them would show up. And I would say, you know what, this is good enough. I'm gonna jump in because I don't wanna miss out on this trade, because I did that just for the last one and it worked out. And so I FOMO'd into a trade now because I was frustrated, and it allowed my emotions to take control of me. And so from there, generally because I'm jumping in on a bad trade now based on FOMO, it would turn into a loss, and I would become even more frustrated. And sometimes this would turn into something even worse, tunnel vision, panic, I would start to revenge trade even, and I would take more losses. But eventually I would get to a point where I say, okay, I have to take a break. I gotta be done with trading for the day. I need to either take tomorrow off or, somehow reset and come back to the drawing board, right? And of course, I would reset, but those emotions and underlying reasons of why I, had the fear of being wrong would restart, and this cycle would just continue. And so that would be how I would be stuck in, I still broke out of the learning loop, but now I'm stuck in another loop of just self-sabotaging myself over and over. And this is something I constantly see other people struggling with. They'll have a strategy, but they'll have all these emotions that are just negatively impacting their trading. And if we don't learn how to deal with these and stop them from controlling our actions, we're never gonna get to the end goal of becoming consistently profitable. And so I wanna walk you through how we can combat these 3 stages, how we can go from being stuck in the learning loop to being in the self-sabotage loop and breaking out of both of those to become consistently profitable. And I'm confident that I know what I have will help you, because I've heard it from other people that they were jumping from strategy to strategy until they learned some of the stuff I'm about to teach you, and it helped them break out of those loops and become consistently profitable. And so let's first work on how we can break out of the learning loop, because that's generally the one that I think stops the most people. And so the first thing with doing that is you have to find a strategy that works for you. And so my strategy is super simple. Over time, I realized that through all the strategies I was trying out, all I could really be confident in that, hey, I know how to find clear support or resistance zones. And I can see that the market can clearly bounce off those levels. And so I created a strategy based on that. All this does is it's a simple process of I wait for the market to come down to one of these levels. And then I look for, on a smaller time frame chart, generally I trade on a 1-minute chart. And then I essentially follow my step pattern. And then step 2 is waiting for, kind of the current trend to come down. And then step 3 is I look for kind of a reversal pattern. And then I jump in, betting that the market is gonna go higher. And I usually go for, a 3 times risk reward ratio. So if I'm risking something like $150 here, I'll eventually manage the trade. And here I made about $600 on a trade. So it was about a 4x trade. So that was a really nice profit. And so this isn't something I'm gonna go into a ton of detail here because I have a ton of YouTube videos explaining this. But the whole idea is that you need to narrow down your focus. And so for me, that's what looking solely at reversal patterns did. Is instead of trying to, catch every swing in the market of, okay, I'm gonna catch a reversal here, I'm gonna look for a continuation trade up here. Instead, I'm just looking for one specific thing every day, and that's all I do. What I've realized as well is because all I do is I really just look at the candlestick patterns. I use just a couple of trend lines, support and resistance zones, that it simplifies things really well. And it allows you to actually trade this on really any market or time frame, because these candlestick patterns are just a reflection of the price and what the market is doing. And so this can apply to any market. And one thing that narrowed this down even more for me, and I've always found that to get out of that learning loop, the better thing to do is take things away. What can you do that will take away things that are negatively impacting your trading? If trading, 3 different patterns is negatively impacting your trading, take out 1 or 2 that you don't feel like you're consistently as profitable with. And so another thing that really helped me narrow things down over time was looking at kind of 30-minute reversals. Is what I realized is just consistently looking at the market is looking at the NASDAQ futures and the S&P 500 futures is 30 minutes after the open. If on these charts, the market opens at 6:30, which is West Coast time, it's 30 minutes around 7 o'clock that's when the markets reverse a lot. And so that's how I narrowed down my focus even more and stuck with a really solid strategy. So I, don't go back in that learning loop. You got to be aware these loops, once you break out of it, you can go right back into it if you're not careful. And so that's something I'm always working towards, is just getting better and and more narrow focus. Is every chart of these are from one specific month, and you can see at 7 o'clock, there's a really nice, the market opens, kind of moves down, makes a really nice double bottom, and then reverses. And so this is something that I find that is super repeatable, and that this is how you want to approach trading, is find something that you are confident in and that you can consistently do day in and day out. Because if you spend your time trying to just jump around and, react to what the market is doing instead of going in and having a plan, you're not going to become consistently profitable. And so that's something that I have found to be really beneficial. And another really cool tool that I actually made, I call the News Navigator, is when you're trading futures and the S&P 500, is that, well, there's a lot of news that comes out. And so just to quickly show you is, here's a news release platform I use. It's just called Forex Factory, and it just shows every day, okay, there is news releases that are either red and you got to be really aware of, or there's just yellow ones that aren't a big deal, or some orange ones. And what I realized is this doesn't actually do a good job of saying what is important or not. And so what I did is I just looked at, every release and took data over time of saying, okay, what's the release? What's the potential movement? And so is there actually potential movement? And so can I trade through the release? And so there's not many that happen 15 minutes after the market opens, but there's a ton that happen an hour before the market opens and 30 minutes after the market opens. And so this 30-minute one that happens after the market open, these ones are really important to pay attention to, because there's some that you got to be aware of that cause massive movement, and some that are just no movement at all and you can trade through. And so that is something that I found really, really helpful with just narrowing my focus down even more. And so that's really how you have to break out of that learning loop, is find something that you like and stick to it. It doesn't have to be my strategy. We all have different trading personalities and what makes sense for us and what we feel comfortable with. I feel comfortable with taking reversal trades because that's what I just mentally makes sense. I can see that, okay, when the market comes down, for me, I see that, okay, there's a good risk reward here, and that makes a lot of sense for me. Versus some people, they're just better at continuation trades. But for me, mentally, that just doesn't work. And so the second thing is, once you break out of that, you're gonna be put right into the self-sabotage loop. And so there's 4 steps to breaking out of this loop. And so the important ones is building awareness of what your emotions are that negatively impact your trading. My big ones were, the fear of being wrong. And so starting to become aware of just what those are, the frustration of missing profits. Maybe yours is FOMO, maybe yours is greed or desperation to, make a lot of money quickly. And so you have to then, once you become aware of what those emotions are, you gotta understand how you react impulsively to those actions. And so for me, my fear of being wrong would lead me to skip a trade. And that I don't necessarily want to logically skip a trade. I want to logically be following my plan. But as humans, we follow our emotions a lot. We're emotional beings. They take control over us and impulsively cause us to do things. And so a lot of the time is we are reactionary based on our emotions. And what we need to learn to do is we need to overcome our impulsivity to react to those emotions. And so instead, we want to react how we want. And so instead, what a really good way to illustrate this is, I still, when a trade comes up, I still have that innate fear of being wrong. And so I get nervous, and instead of skipping a trade out of that fear, I have created a new pattern and a way I react. Instead of reacting based on my emotions and my fear, I say, no, I want to jump into this trade. And so when I would jump into that trade, it would break that self-sabotage loop, and it would start this new loop of I jump in a trade and I would start to build confidence in my ability to trade. And so then it would come up to the next trade and I would still have that same emotion of fear of being wrong. But instead, I've now started to learn to control those actions, and I consistently react accordingly and how I want to. And so that's the biggest thing to help break yourself out of that loop, is instead of letting your emotions control you, you feel your emotions, accept that you feel that way. It's okay to be scared that you're gonna be wrong. We're not robots. It's a part of who we are. And instead, you just say, okay, I feel that way, but I'm still gonna do what I wanna do. And so this is the basic framework of breaking out of that learning loop, breaking out of the self-sabotage loop, and becoming consistently profitable. Now, just because you know this doesn't mean it's not gonna be easy. It's still gonna be really hard. And so what I've done to help accelerate this for you is I've created a 90-day confident trader program that is designed to help you break out of both of these loops and become consistently profitable as fast as possible. And I'm confident that this will help you drastically accelerate and improve your trading because I've seen it do that for people already. People that were struggling for so long, they were losing and just consistently, in that part of the learning curve where they're just not making consistent money. And then they join the program and they start to see that change in their equity curve where they're consistently profitable month after month. And it's just awesome to see where these people are saying, they've been struggling and not consistent for 3.5 years and they're way more consistent than ever. They feel like they finally found their strategy if they're using my reversal strategy, but it's also helping them just break those cycles that you're just stuck in as a trader. And there have been people that have had big 50% account returns after a year. This person down here almost has 100% return. And so what I want this to illustrate is that it's helped a lot of other people break out of these learning loops. I can never, guarantee that you are gonna make $96,000 in 2 months, but I can guarantee that this is going to drastically accelerate your learning curve and your process getting through these loops. And so let me illustrate to you how this program is laid out and how it's gonna help you break out of the learning loop and then the self-sabotage loop. And so first is right away when you jump in is you are going to get access to my whole trading strategy and everything I have and know about what makes a profitable strategy and how to become consistently with it and manage and grow an account over time and keeping you out of being stuck in that cycle. And so the first thing that it's gonna address is it's just gonna jumpstart your trading journey. It's gonna help you build your foundation of how to understand everything that I'm talking about going forwards. But then it's gonna walk you through how to consistently look for reversals because again, that's what my strategy focuses on. It's gonna give you a deep dive into how I identify those patterns, the early shifts that the market has, and teach you advanced market movement that will help you realize when these signals are gonna happen. And so this dives into way more depth than what my YouTube videos do. Those really give a good overview of my entry checklist and how I trade, but this gives you a super deep dive into everything about that. And then as well, it'll start to go into how to consistently manage trades. It'll go into my roadmap of those 30-minute after the market open reversals. It'll give you that news release navigator that we talked about. And it will just go through, I have hours and months of trade examples in there. And the biggest thing about this is probably it helps you know when to avoid entering trades even when the signal shows up. Because what I see a lot of people doing is they will follow my 5-step checklist, but there's times when you actually shouldn't be entering in the trade and there's certain signals that show that. And then the last really crucial thing is learning how to grow your account and treat trading like a business. I have a 3-step sizing growth plan in there that will really help you know how to scale properly and go at this the right way. The biggest thing about trading and breaking that learning loop is you need to become process focused and focus on consistently executing the same strategy, because otherwise you're just gonna be stuck in this learning loop over and over. And so all this will help you break out of that learning loop. And then we go on to the second part of the program, which is really where the 90 days comes in. I have a 9-week framework that is gonna now start focusing on that self-sabotage loop. And instead of you getting stuck in that, it's gonna help you break out of that and work towards becoming consistently profitable with your strategy. What this is gonna do is it's going to be giving you weekly actionable steps and systems that you can use to start becoming aware of how things are negatively affecting you, it's gonna help you build your emotional matrix and figure out what's actually affecting you, the level that it's affecting you, and how you can actually change how these negatively affect you. And then as well, it's gonna start to bring in some other concept of your mental capital and your body battery and how you can deal with loss streaks and change those around. There are a ton of destructive emotions that affect your trading, and you need to learn how to control them. And so what this is gonna do is there are frameworks in there that I call the stimulus gap response framework that is going to stop you from becoming impulsive, and it'll help you react how you want. I have another really cool system in there that I call the emotional spectrum that is going to help you stay calm amid all the chaos and help you know, okay, what emotions am I okay to trade during? And when I feel certain emotions, what do I do and how do I stay away from starting to revenge trade and get out of control? And then the last whole phase of this is how you start to work to becoming consistently profitable, how you start narrowing things down, stopping the loss streaks and the boom and bust cycles that really start to happen when you start to get close to becoming profitable. And then as well, what it'll start do is it'll start to ingrain these things into muscle memory. So instead of having that self-sabotage loop be, a negative pattern, you're gonna break out of that and you're gonna start to make positive patterns and loops that you are stuck in that are beneficial to your trading. And so essentially, successful trading will start to become like muscle memory for you. That's what's so powerful about this is think of everything like muscle memory. How we react to things and how this self-sabotage loop works is it's just muscle memory. Your body is used to saying, okay, I'm nervous, I'm scared, I'm gonna stay away from and get away from what is making me nervous and scared and not do whatever that thing is. And instead, we reprogram our minds and create different pathways and muscle memory to create positive emotional loops that positively affect our trading. And so all of this you can find in my self-paced on-demand 90 Confident Trader program, and you can get that in the link below. And so really what you get access with this is everything that I have built out that is going to help you break out of that learning loop and then into the self-sabotage loop and break out of that and accelerate your trading to becoming consistently profitable. And so there's hours and hours on my strategy and how to consistently execute that because that's one of the most important things. But then you also have that 9 weeks of your trading mindset focused work. You're gonna get a lifetime access to all this. You're gonna get a ton of tools, guides, routines, and as well as frameworks to help build your trading career. You're gonna get that news release navigator that I talked about earlier. And as well, there's a couple of things I've added in as exclusive bonuses. I've added in a lifetime community access to my exclusive trading chat room. And generally this is a monthly subscription. And so it's gonna save you a ton of money for that. But as well, this is really helpful in once you've gone through this whole program and used all these tools, gone through those 90 days, you're still gonna want continued help and education. And what this community does is it's an extremely active community that helps each other. And not just for me, but everyone else there is focused on this same thing. And they're gonna know all these materials that you're working on too. And so it's gonna help you bounce ideas off of each other and as well off of me and get help anytime you need. Another thing that I added is I have learned a ton about the mental side of trading from my actual trading coach. He focuses mainly on the mental side of trading with me. And what we did is we sat down for an 1.5-hour session and talked about what it will take for someone starting with this strategy. He knows this strategy very well because I've worked with him for coming up on 4 years now, is how we can tailor all of this and best make it work for you. Someone coming from a beginner or, stuck in those loops and how they can start to break them going forward. And so this is an 1.5-hour session that is highly focused on that. And I think you will find it insanely beneficial to have someone else's perspective as well on all this. And then the last thing is because I'm so confident in this program drastically improving and changing your trading just from how much effort I've put into it, but also just reviews from other people, is that I have 100% guarantee to give you a refund, no questions asked, in the first 30 days. If you, for any reason, it doesn't matter, want a refund, just email me and I will happily give it to you. The idea is this is, I understand there's a lot of shady stuff out there online, and I just want to make this kind of a risk-free investment for you to help accelerate your journey in trading by saving you a lot of time, but also saving you a lot of money. I lost a lot of money making a ton of mistakes and trying to break out of these loops myself. And so what this is going to do is it's going to help you do that for less money and less time. And so I highly recommend checking out the link below. It'll go into way more in depth and show you kind of everything that's in the platform, more than I've talked to here. And of course, you don't have to get the program. We talked about ways for you to break out of the learning loop and the self-sabotage loop already. And so feel free to keep going about it on your own if you want and if that works for you. If not though, I'll see you inside.